So in today's video, we're going to break down ES. If you want to see the proof of me calling this out prior, I've done it inside of the Telegram. I'll leave that as the first link in the description. Inside of that as well, I posted a free outlook, right, which you could have seen me go ahead and actually mention that I was looking for this setup and where I was looking to engage in the market, etc., etc. Okay, so the aim of this video is to show you that by keeping simple and structured rules that you can come to strong conclusions as to where price is likely to go, and then having a system around managing the trade, you can go ahead and capitalize on market moves without all the over complex rules, systems, and sort of logic. Okay, so I'm going to show it to you in 3 steps, right? So first of all, we always start with a top down. Okay, now with ES, right, or I guess with any asset, when I'm looking for a target, I'm always thinking about liquidity and fair value, right? So and order flow. So with this, right, I understand that yes, we are still overall bullish, right? In terms of a market environment, we still are pressing higher, okay? And when you're trading indices, it's always going to be, or 99% of the time, it's always going to be like that, okay? However, on the weekly, I can identify that we were in bullish order flow. We were respecting bullish arrays. However, we had shown a shift to the downside, and also price was sweeping above old highs and then pushing lower. Okay. Thirdly, we have a set of equal lows. Okay. So to keep it very simple, I've identified a liquidity pool. I've identified that order flow is trading towards that liquidity pool. Therefore, I'm going to be looking for 2 things. Okay, let's move to the daily so I can explain what those are. So this is the candle that we traded inside of. This is Tuesday's candle. Right, so when I am looking to be bearish, right, I'm only really looking for 2 things. I'm looking for price to return into some sort of bearish array, i.e. an FVG, or I'm looking for an old high to get ran out and then to be short. Okay, very, very simple, right? You don't need to use every single PD array. You don't need to think about mitigation blocks. You don't need to think about 1,000,001 concepts. You can literally whittle it down to those 2. If you want, you can also use the confluence of an order block as well, right? That's completely fine. So let's say it's 3 concepts. You're going to use FVGs, liquidity, and order blocks, right? So we have additional confluence at this level, right? So I know I'm looking to be a seller. Okay, I'm looking for the week to print bearish, right? Obviously, we don't even know if we're going to get that right now. And technically speaking, this day didn't even close bearish, yet we were still able to capitalize on the market. So that's also showing you that you don't have to be right about everything to make money, okay? So that's another thing. Drop the need to be right, because you don't need to be right to make money, right? So like I said, if I'm in a bearish environment, I'm looking to short from bearish FVGs. Okay, let's just say specifically in this example on the daily time frame. Okay, and or looking to short above liquidity, right? Let's just say that's on the daily time frame as well. Okay, so Monday had started off by moving lower. Okay, just sort of creating more liquidity to the downside and then printing bullish. But more importantly, Monday's candle led to the formation of this FVG. So that's number 1. We've got the bias out of the way. That's how I formulated bias. And that's why on Monday evening, I was already aware that Tuesday is potentially going to offer me a good sell setup based on all the information I've just given you. Okay. So now let's jump a bit lower. You know what? We're going to stick to the 1 hour. Now, obviously, this is already all printed out. Okay. And there's no point me showing you in replay mode because there's no point, right? So let's just mark everything on so we know what all the levels that I have marked on are. And like I said, I want to keep this simple and easy to understand. So just to add a few other nice confluences from understanding, just from understanding the setup, we can also understand on the hourly that we have raided out liquidity. Okay, so we understand we have market participants, so smart money entering in shorts, right, pairing their orders with liquidity, or sorry, willing buyers above this high. Okay, I could break down the hourly, I could talk about this hourly shift, blah blah, but you know what, we'll just break it down in terms of a very simplistic sort of logic, right? So I know there's a lot of, like, as ICT will call it, lipstick on the chart, right? But all I've marked on here is Asia, London, AM session, PM session, and I've also put on this indicator which shows the daily open, which is this faint dotted blue line here. Okay, this line is just representing the start of the algorithmic day. Okay, so if we are bullish, right, two things. We are first looking, so we're bearish, right? If we are bearish, right, we want to look, or even if we are bullish, right, we want to look to take a trade somewhere in and around the daily open. Why is that? Because if we think about a candle, right, if I just draw up a candlestick here, and let's just do it as black, because that's what my bearish candles look like. If we look to trade around the daily open, okay, daily open being, let's just say it's this level here, right? Technically speaking, it's not exactly that level, but let's just mark that one. So if I'm confident in the formation of a bearish day, then any entry in and around this level, right, or even above it, means that I'm getting filled in my entries somewhere inside of this upper wick, right? If we are looking to be a seller, right, hold on, I'm just gonna, this is too strong. There we go. If I'm looking to be a seller on a day that I think is bearish, then any entry, right, in and around the daily open is great, right? Because then I know that I'm going to end up capturing majority of this daily range, right, if I position myself in the wick. That is plain and simply put what the daily open does and what its utility is. Okay, so that's number one. Now you still have one issue, right, which is, well, how do we prevent ourselves from getting caught in this wick move, right? So in what ICT would call the Judas swing, in the move that goes against our bias, how do we prevent ourselves from maybe front running this wick? So let's just say price was moving higher, I enter here, price takes me out and then runs lower. How do we stop ourselves from getting wicked out? Right, now I have two solutions to this. One is to use the economic calendar, but two is to use daily cycles. Okay, so just using the economic calendar here, right? First, this wick higher was PPI. Okay, so PPI news release went ahead, swept out liquidity here. Okay, just to add another confluence on, right? We actually have SMT with NQ. Just to add this on, this is a great confluence, and another thing that sort of builds the bias and the setup. Okay, daily open here. Okay, price has gone ahead during the economic news release and has swept out liquidity. Now you can go ahead and backtest this, but when a specific news release like PPI comes out, wicks above liquidity, a lot of the time this will denote higher day for us. Okay, so the answer to the question I just gave you, which is how do we know when price, right, is going to how do we stop ourselves from getting wicked out of this position before it runs? One, we can look at news releases, right? So we can look at the economic calendar and we can understand that, okay, cool, PPI was here, we don't want to front PPI, we want to wait for it. Now another factor that can play in, right, is that you can use the argument and you can say, well, technically speaking, didn't we sweep liquidity already? Okay, number one, during London, as I've mentioned in previous videos, has a high likelihood of creating high of day. Yes, all these factors are 100% correct. So the function again, the news again can have two functions, right? You probably know, if you traded for any period of time, that sometimes the news doesn't sweep and sometimes the news just distributes, right? So it just runs. Okay, two answers to that, right? sometimes you are going to miss the move. If it's something like CPI, if it's something like FOMC, sometimes price is just going to run and you are just going to miss the move, and you need to become mentally okay with that, okay? So you just need to accept the fact that you are going to miss some moves, because sometimes it isn't going to sweep and sometimes it is just going to run to target. Number one. Number two is I'll use daily cycles, and then I will use specific timings. So for me, right, I will only take a trade in AM session on indices, right? I did used to trade London. I took it out of the model to keep it simple. So I will only trade this specific window, AM session. So for example, if this PPI did send us lower, I'm not engaging in it anyway, and I'm completely fine and happy with missing the move. Number one, okay? Number two is to use daily cycles. So if you're familiar with some of my other daily cycles, when we sweep at 130, I refer to this as an NY reversal setup. So if you don't understand what daily cycles are, basically I have specific profiles in which I want to see price play out in. Okay, so I have specific sort of rule sets and pictures and multiple examples of price following a set specific profile, and this is one of them, right? So if you've watched any of my other videos, you'll know about NY reversal. NY reversal is basically when we go ahead and create the high of the day at or between 1 to 2 o'clock, which is this cycle, right? After we do that, and this is NY reversal, but this is an indices variant. Indices variant is slightly different in the sense that we're going to trade it at a different time. So I'm going to wait till 2:30 to go ahead and engage in this, okay? So NY reversal, like I said, is when we go ahead and create a high of the day at 1:30 or 1 to 2 o'clock. So to answer the question about the daily open, right, and I'm just a bit worried that this daily open price isn't visible, so I'm just gonna mark it on, okay? So using the idea of daily cycles and the idea of the economic calendar, I am then confident to say potentially that this is high of day. I'm also aware though that when this session opened up, that we could have had two scenarios. We could have ran this out, right, which I didn't mind happening because that's another daily cycle, it's the AM reversal. Or if we start to displace beneath this swing low, which if you go and have a look in the Telegram is exactly what I mentioned I wanted to see. If we get a displacement beneath this swing low, right, then I will look for a trade idea, okay? Which is exactly what I did, right? So let's just jump down to the 5 minutes. So in terms of the entry, it's very simple, right? I'm happy to say this is a potential and high probability scenario that this is high of the day. It's also coupled with SMT, okay, which adds even more confidence to the bias. Once we've showed displacement in my desired direction, to me, that's telling me that we're confirmed in the sense that this high is confirmed and we are potentially then going to see lower prices. So if you were just to break this down into 3 steps, right? We've got number one, which is direction. So we're confident in saying that we want to see a bearish day, number one. Number two is then the manipulation. You're waiting for price to confirm a manipulation, right? Knowing that the high of day is set in, okay? And you can do that through the economic calendar, through the daily cycles, all that information there. Then finally, you're just looking to get on side with the order flow, which you can typically do on, let's say, a 15-minute, a 5-minute, even an hourly, okay? So some people will whittle this down to, I'm literally just looking for an OT after price displaces in my desired direction. So they might literally draw from high to low, and they might draw, which one is this? There we go. So you guys might, or sorry, the guy using the OTE might say, okay, cool, once we trade back into the OTE from high to low, right, OTE being this area, let me just get rid of some of this so there doesn't feel like there's so much clutter on the chart. There we go. So from high to low, OTE, right, and remember this blue line is the daily open, yeah? So you could trade that, right? My model was just market structure shift, FVG, okay, which is bang on the daily open, and SL, right, is going to be at either the candle that creates the FVG or the candle above that. Okay, in this example, I picked the candle above that. So yes, I did suffer some drawdown, which was close to my entry, which is completely fine. Oh, sorry, close to my SL. And then in terms of the target now the target, I'm a big advocate of time-based TPing, which you probably have seen me mention a lot of the time. So my target overall, right, the draw realistically is the equal lows that I've mentioned all the way to the left. Okay, if we just go back to explain those, yeah, equal lows here, right, and this low. So I'm thinking about this as like a market maker sell model, and I'm thinking, yeah, my target is all the way down here. However, in the back of my mind, and according to my sort of model, I am looking for a 2R at a minimum. So if we get a 2R based on specific time, and we come into specific arrays at specific times, I will take the trade, right? The majority of the trade. So if I mark on the session, right, I like to TP, right? If I just put these back on, this is why I use these boxes. It's a really good visual indicator. I use the last 30 minutes of the session typically as an area to take profit. Okay, so I'm looking for, right, so typically I don't care about any opposing arrays. So like, for example, people will be interested in like looking at this order block or looking at this FEG and thinking, oh, like maybe we're following bullish order flow. If I am bearish, I don't care about any bullish arrays at all. Okay, well, that's wrong. The only time I care about the bullish arrays is when it aligns up with the last 30 minutes of the session. Okay, so you probably see where I'm going with this. This FEG, right, lines up with the final 30 minutes of the session, right? So this gets tagged at what? 16:45, okay, which is the last 15 minutes. So anywhere inside of that last 30 minutes, I'm going to look to take profit on the position, okay? So I enter on the 5-minute FEG, right? Stop, I've showed why. Everything is covered, right? TP 2.3R, perfect, right? So it hits the minimum of a 2R for me. I'm only interested in the opposing array because it lines up with price. So this is aligning time and price at specific times. I took 90% here with the intention and the belief that a PM session would then run lower, and that remaining 10% would potentially be able to be taken out at this level, right? The reason I've done that is because we want to let our winners run, and I know I've only left a small amount on, so realistically it's not really going to do too much for my P&L, but I like to leave a run, right? It's just a sort of habit. So I left the runner on, that got broke even, right? Fine, no issues there. I've taken out the bulk of the position, which was what I intended to do. This is where you need to figure out if you're a sort of a swing trader or a day trader, and when to be either or, okay? In this case, right, based on the economic calendar, we have CPI today, right? So as of the time of this recording, we have CPI. I know that price could potentially just accumulate for CPI to go ahead and run lower, okay? Is that going to stop me from trading this beautiful setup? No. But that's going to put me in the mind frame to understand that, okay, cool, the likelihood of this actually running lower and Tuesday being high of the week, the probabilities are lowered, right? If we didn't have CPI, I would be very, 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 very confident in this low being taken out, okay, and price not really doing much of this, what it did. However, because we have big news releases like CPI, we've got to understand that larger market participants, they potentially will want to engage in the market and wait for those big CPI news releases to play out before seeing price go lower, right? So we understand that in this event, I'm better off being a day trader and looking to just take profit on my small sort of day trade, or sorry, taking majority of the profit on the day trade versus being that sort of one shot, one kill, thinking, yeah, you know what, I'm going to hold till Thursday, for example. Okay, so it's about identifying what is ahead of us in terms of sort of the market climate, what news releases we have, and then making objective decisions based on that. Yeah, so I hope you guys have enjoyed this. I feel like I've dropped some decent information here, right, in terms of how you can go ahead and even change your own trade setup, model, management, etc., etc. Yeah. So, like I said, if you have any questions, always feel free to ask them in the comment section below, and I'll see you guys in the next one.